Hello and welcome to another update video on Bitcoin. We're here currently on the weekly chart, and today I just want to talk to you a little bit about where the journey could be going, how the Bitcoin chart is looking like, and what the relevant, you could say, support zones are, or support corridors, support clusters basically, or yeah, a support range that can keep this bull market alive. What I want to do specific in this video, I want to take a look at a series or a set of exponential moving averages here on the long-term chart, on the weekly chart, to determine with you what a relevant support range could be, could look like from an EMA point of view, exponential moving averages that would that can support the current bull market. In recent videos, we've looked at a lot of different indicators, and we use Elliott Wave from a structural point of view to explain market structure. And yeah, the Elliott Wave structures tell us that we could be very, very close to a major price top. We talked about that in previous videos. Now, let's first talk about where we come from, then we'll take a look at the exponential moving averages. What we look at here on this chart is a so-called 5-wave move up, an upside impulse. From an Elliott Wave point of view, that means the cycle can be considered complete. That doesn't mean it is complete, absolutely not. A full wave count never means the wave count is the wave count, might be complete, but the actual price has topped, yeah? So it does not mean just because we have a 5-wave move up, it doesn't mean the price is turning around to the downside, right? It doesn't work like that. Actually, if you follow our microstructure analysis, then you know that there are still pathways that point to higher prices, which we are watching for primarily, yeah? But still, having a 5-wave move up means the risk is high on the macro level, and a larger correction could unfold at any point. Now, we talked in previous updates about the extent that such a correction could take. In this video here, I just want to talk a little bit about, okay, when do we actually know that a top is in? Now, probabilities are dynamic, and we're watching microstructures on a daily basis on our other YouTube channels, but also in our membership. So we will probably get a signal that a top is in very, very early. But obviously, this here is the weekly chart. So on the smaller time frame, the trend can be down before you even notice it on the weekly chart. This here is really macro. Yeah, there are a lot of investors out there, a lot of people who just want to look at the chart from a larger time frame and just want to get a simple set of indicators. Now, let's see if we can develop that together. Let's take a look here at our overview of exponential moving averages. This here is basically the entire bull market that you see here, yeah, from left to right, from 2022 all the way to where we are right now. And you see various exponential moving averages. A lot of these are you could say Fibonacci related, like for example 21, 34, 55. They are Fibonacci numbers and Fibonacci related. Now, it's important to understand that a lot of them have been tested in this bull market, and the prices respected certain ones. Now, obviously here from the 2022 lows, the market started the move up, and only really then we started to respect these moving averages. Like here, that was early in 2023. Yeah, the price respected here the 200-week moving average. Also here later in 2023. So it seems like we've never broken below the 200-week moving average, which at the time was around $25,000. It was retested several times, and then the price moved up, moved away from these moving averages. And what you see here is that over time, the price always comes back to its moving average support corridor, you could say. The question is just, which moving averages do we consider relevant? And I think there's a pattern here. Early in the bull cycle, it was the 200-week moving average, which got respected. By the way, this is now at $62,000. Later in the bull market then, here in 2024 and 2025, the market tested the 55-week moving average a couple of times. Yeah, that's the 55-week moving average, which is at the moment at $95,000. We will put them together on the TradingView chart, but I think that is important to understand. Here, twice it was tested. That was here in September 2024, actually. Yeah, we tested it. And the price formed a low there in September last year. At the time, the 55 moving average, 55-week moving average was around $52,000. And then here, that was early in 2025, actually in April. You might remember that price was around $76,000. So it's at the moment at around 95, 96,000. So I think it's probably a good metric for this bull market, that 55-week moving average. I mean, it was tested a couple of times, and of course it's not exact science, but what that means to me is that if we break below this level, it is a warning. There will be levels below, of course. Yeah. For example, the next one would be the 89 week moving average, EMA, yeah, at 84K. So that would be the next one to watch if 55 breaks, but I would treat a break below the 55-week moving average already as a warning if we consider this indicator. Now, let us put these onto the chart here, because what we need to do is simply, let's go to the trading view indicators, and we add the exponential moving average. And I want to have a couple on there, maybe even 3. And the way to define this is we want to select time frame chart, which is the current one. I can make it clearer and just select week, because it's the weekly chart. I want to select 55 here. Change the color a bit. Make it a little thicker. That's the first one, 55 week. And you see it's currently here around, 95K. Now the next one would be 89. As we've seen, this one was relevant as well. And it's also the one that is sitting below the 55. Change it to orange. Make it a little thicker. And then I want to add the 200, which is far away, but it is the one that was respected early in the bull market, was tested. And it could be relevant going forward. But this is obviously far away and would be too late for any meaningful signal, right? Still want to have it on the chart. That's, by the way, there is a metric. There is actually an indicator, the 200-week moving average heat map. You might know about it. It's not so relevant right now, but it is a long-term indicator for Bitcoin. Basically, the distance away from that 200-week moving average, the more, the further away we get from that one, the more overheated the market is. But you see that here in 2023, when the bull market started, we retested this support corridor and the price moved up, came down, tested the 55 a couple of times, moved up, tested the 55. Based on what we see here, the 55-week EMA seems to be a very, very relevant one. So I think from a perspective like that, a test of at least that level is possible at any point. If you follow our daily analysis, then you know that also in this area there is some confluence of Fibonacci support. So if we get a pullback, this would be a very, very relevant one to watch. Basically, what we can say is that throughout this entire bull market, the price never formed a break or never broke below the 55-week EMA. So any break below it would be a first signal, that a larger correction is unfolding, maybe even a bear market. That would be an early signal from an, let's say, moving average point of view, just a support band point of view. It is relevant simply because it was tested before, and moving averages are like trend filters. They are trend filters. Now, are we above a certain moving average right now? And at the moment, if we zoom in further, we can see that we are holding this one. So which one is that actually? It seems to be that we're currently holding above the 21-week, and we could also add the 34-week, which is just below that. These are kind of more relevant on the smaller time frames and for the short-term trends. So let's add one more to the chart. Let's add one more so that we also have a support level for the immediate short term. Yep, you see in the very short term here, I mean, it seems nearly like we're moving up the bands, right, in this cycle. So in the beginning, it was like the 200, then we tested the 55, and the shorter time frame wasn't so relevant one. And now basically shorter time frame. Now the 21 week was tested, but that it wasn't really so relevant before. Maybe here in June, but that was not so relevant. We're currently holding above that one. I would find that more fragile. Yeah, you see, we broke below it in February, broke below it in July. So I think the 55 is more stable. It's a better trend filter. For the short-term trend, probably the 21, which is currently holding around, let's go back, we see it here, which is currently holding around $109,000. So hopefully that gives you a better orientation in the crypto market, gives you a good idea of what the current trend is like, and which levels or moving averages we can use as trend filters for the current bull market and trend. Thanks so much. Hope you enjoyed it. Make sure to subscribe and also leave a thumbs up if you appreciate the analysis. Thanks so much. Bye-bye.